Joe Exotic. Who the fuck is Joe Exotic?
You don't know who Joe Exotic is?
No. Who is he? What does he do? Does he know about
You have to Google it. He is exactly like you, to be fair.
What's his name? Joe Exotic.
Joe Exotic. He's a Tiger King.
Oh shit! Yeah, no, yeah. Fuck that. Yeah, right. I'll have a tiger. I want a tiger. I might buy a tiger. Lewis, do you want to share a tiger?
Not with you, mate.
No.
I've got a baby to look after.
It's true. Maybe a tiger wouldn't be the best option for you right now. Yeah, cool.
How many people we got? 29. Yeah, just going to talk about some ranges,
and show how we
how we should be following them.
Yeah, how we should have been trading the last 2 weeks, not how I personally have been. But yeah, well, that's the point. Oh, mate, sorry. I interrupted there, didn't I? Me and my loud voice.
You can let people in, can't you?
Yeah.
Cool, right. I'll crack on. Right. So about a month ago, this is about a month ago now, we talked about this price action many times, but if we were to follow these supply ranges, okay, obviously the low to the high here, we would have made a lot of money, put it that way, if we have done it correctly. Now, it's just simply following these supply ranges. You know, we break out of the range, we create this new one here. Okay, obviously this low to this high, this is this whole supply range. Again, we break out. We break out of this. Again, now what's important to understand, like I've said many times, is we're not always going to come back to the supply ranges. You know, some are going to get left. But what's important is to understand that you just got to keep following them. If we break out, we create a new range, and we break out again, we're following the most recent range. Okay, which is exactly what happens down here. Okay, we break down, we keep coming down, we create this new range here. Okay, then obviously we break out. Let me just move this. We break lower again, and then we obviously create another new range here. Break out again. So this is obviously left for a reason. This is going to get left for a later date. Okay, it's left unmitigated. What's important is we don't focus so much on this after this supply range now breaks. This is our new supply range. So we're just playing the most recent one until one breaks. Then obviously we flip around and then we're going to start trading our demand ranges. Now we do come back up here, we mitigate something in here. This now is our whole supply range. Okay, this whole move up. Again, we break out lower. Now again, we have this, because it can be, for me, if it breaks out with a wick, it's broken the range. Whether it's for body or wick, still broken the range. We come back up. Okay, we have a range with inside a range, but essentially this is our bigger range here. Again, price then breaks down, comes back up into it, and again we break down. And it's just simply following these ranges. You know, it's, yes, we can trade pullbacks fine, but until a recent supply range gets broken, then we are only playing pullbacks. Yeah, and again, it's just, obviously some people do struggle with this, but obviously I've been doing it for a while now. I find this quite simple. But if we can draw these as it's happening as well, which I like to do, then you're in a good position to understand the higher time frame. This is on the 4 hour. Because this essentially is where our bigger moves are going to come from. If we can get in here, like, you know, up here, these are the ones we want to get into to run. These are going to be our big trades. Again, trading back up to our, you know, we're reacting for something over here. This is essentially our pullback until this range gets broken on the 4 hour, obviously. It's a little bit like today, for example, just following these supply ranges again on 15-minute here. Again, we break out, we create this new one, back in. Don't know if we end up, do we tap into that? Just maybe, but again, we've come back into it. We can then look for some shorts within it if we get some change of character. Again here. And then down here, and yes, we do get some change of character here. So this might potentially be where we end up reversing, because now this is actually, this is now essentially a demand zone from there to there. It's just so I can see it better. So potentially we might see higher prices from here. Does that make sense so far, everybody?
It does, bro. Thank you.
It does.
Cool. Well, like I say, it's just keeping it simple. That's all we want to do, is keep it simple. The more simple we can keep it, the better. Because I think a lot of people get caught up in, it's very hard. We're programmed to want to take all the time these reversals, when real consistency is going to come from taking continuations, which is hard. But the more you keep doing it, and the more, what changed it for me is I used to mark up the ranges as I used to go. And, you know, until one breaks, there's no need for me to be trading the other way. And I believe a lot of people will find a lot more consistency doing that. I definitely think, obviously, when I start getting back into it more again, which I'm going to be, I will be posting a lot more about ranges and how I'm following the market. And again, obviously, once you understand the alignment with a 4 hour and a 15-minute, they're your best trades, always, hands down. You know, you're following the 4 hour range, and then obviously you're following a 15-minute range in the same direction. Just keep trading them, keep trading the ranges. Has anyone got any? Yeah, Sam, you taking notes? The thing is, it's hard. It's when
It's going up, it's going up, it's going up. Fuck the shorts.
it is hard. The thing is, where it's so low in prices now, you're thinking this is going to be the reversal. This is going to be the reversal. But it's just being patient. Like, you know, who really cares if you're catching the very bottom? Just wait until your 15-minute range turns from supply to demand. Yeah, Sam does. Sam only wants it for his Instagram page. But yeah, it's just let it show you what it's going to do. Don't keep trying to guess. I understand, you know, we got data to the left, which we have potential, you know, demand zones where we're going to get a reversal. But just be patient. Wait for the 15-minute. If it takes a day or two to play out, then just let it be. Because you're going to take. I used to do it. Everyone does it. I still do it. But what is, for me, from my experience only, it's where I found consistency was following the ranges, being patient, and letting it show you what it wants to do before getting in. You know, let's not always worry about catching the bottom, but let it do this. If it's on the 15-minute and it takes a day or two, it takes a day or two. But if you're going to keep going like this and keep, buy, buy, it's painful. It's painful. Does anyone have any questions?
I have one.
Yes.
So if you go back on the 4 hour, please. Like,
Yeah. Let me just, how do I get rid of this in the way?
and I will
I don't-
annotate when.
How do I got all the writing at the top disappear? The Zoom stuff. I can't click on the 4H.
That is a proper call.
I think you can move the Zoom thing to the side or down.
An arrow on it. And just arrow.
Yeah, okay. There you go. I'm good with my tech. Yes, go on.
Yeah, so here on the left, because you said you were following the ranges and basically you marked this range and then this range. But what I see is that we broke out with a wick here and formed another range here. So isn't this a case of a range being disrespected, or are we not looking at these smaller ones at all?
Yeah, I mean, there's a switch in order flow there for sure.
Yeah.
But this is where, like, this is to the degree where you have to use structure as well, right? Because we do have some 4H thing here, right? But then we create this range here, we break out the bottom, we come back, we test the range, and we go to hell.
Yeah, and it's still within the higher time frame structure.
Yeah, exactly, right? Like, it's more, they're both, sort of like when it's in cases like this, I would be saying still, okay, we've broken the range. So likely here we'll see some higher prices, but we still have to understand that the structure is bearish, right? Like all the way down here, right? Like even here, we break this range, right? But we still have to understand that the structure is bearish. So likely the last supply range is going to get respected.
Okay, yeah, it makes sense. Perfect. Thank you.
And always buy, don't sell, whatever the fuck you do. That's it.
Yeah, we learned that this week to only buy.
Exactly. Fucking Patrick.
Just don't listen to Sam.
Mockery of all of it. It's going down. Fuck off, Patrick. Go back to fucking somewhere else, you little bastard. But he's been right because he's been following structure. Like it's that simple, really, isn't it? The guy's been following structure, and funnily enough, and the ranges basically, and funnily enough, he's the one who's
Exactly. Just keeping it simple.
Okay, thank you for answering my question.
No problem. About one me, but anyone else?
Yeah, all right. Can you hear me?
Yeah, sure. Yeah.
How do you actually distinguish a range? Not to sound silly, obviously, because here,
Sorry, let me keep it still.
Right here, this candle doesn't trade below, and then we break. So is this one here? Well, it would be there to. Would it be? Is that right?
Trade. Oh, it's normally the lowest point to the highest point. So.
I think he's saying you get a little 4H change of character.
Yeah.
Yeah. So how do you actually distinguish the pullback to be a range? Is it just when the candles that actually trade lower?
I mean, here, what have you got? You've got this. Because here you've got really this to this would be your last supply range, really. Right? So here, you break this. Yeah, you get a bit of bullish order flow there, and that's why you get this next push, right? That takes up this high, and then you get this breaks, and then goes to hell. But
it's going to be on a smaller time frame. You're going to see it much clearer on a smaller time frame. Yeah, that is a bit. I see what you're saying.
Yeah. No, it was just more so because I feel like I've been marking them out wrong from how you've been doing it on the Zoom now. I feel like a little bit lost with it, how to actually go about marking them all
Absolutely. Have you watched the?
Yeah, I watched it a few times, mate.
How would you? So if you was to mark on here, where you would draw your supply ranges?
So we go from here to here, and obviously I was doing it with body closes, but obviously we're
Okay.
doing it with wicks now. I just found out. So we do close below there, and then would we be right in saying from here to here?
Yeah.
But
Yeah.
you didn't
No.
mark that because you
I
didn't
was-
see that initially. I was
Yeah. Like you say, yeah, you are right. It's just
yeah.
like Sam just said, obviously being within structure, it's I use a wick. I don't know what Sam uses. Do you use a wick or body when it comes to ranges or order flow?
Break it. No, I use a wick move. Like
Yeah,
out has created a new range, isn't it? So yeah.
of course, yeah.
It's like, it's generally speaking, you like with anything, right? You want to take the size of it into account to a degree, right?
Yeah. So do you use the time frame relevant for a pullback at all or not? Like in terms of pips, obviously like 13 to 15.
No, but I've never really looked at it like that. But it's like what I'd see this as, right, is okay, yeah, we've got this larger range here, right? We come out of this, right, and we create this smaller range here, but this is much smaller, right? Like, this isn't, until this one is taken out, then we're still overall, we've got that bearish thing.
Yeah.
Yeah.
Same as
Yeah.
down here, right? Like if we're looking at this, right? Like even if we broke above these sorts of levels, you still wouldn't be expecting that to get disrespected, right?
So you're more focusing on the bigger stuff than the small stuff.
Yeah.
Well, it's just like the relevance of it, right? Until we've got, like, if you've got something like this, a bit of price action like this, right? Take into account the bigger thing, right? Like have a look at structure, stuff like that, see how all of that, because once this goes, this does not mean that it's bullish, right? That means that we've got a bullish pullback, right? Same as once this goes over here, right? It doesn't mean that we're bullish, it just means we've got a bullish pullback.
Okay.
Right? You see what I mean? Like once you start getting like, what if this one had been disrespected, right? More likely than not, we're going to see like higher prices into an unmitigated large one, but we still have to take into account that this is the structure, right? Like the structure is like this. So until the high gets taken, we are still bearish, but we are seeing bullish order flow, right? And if we're seeing 4H bullish order flow, then really we want to be waiting for like an extreme or like an M15 structure there, something like that.
Yeah.
Yeah.
Yeah. So just going back, just in terms of marking out, we're just sort of looking at the bigger stuff. So don't get caught up when we do see like a candle not trade lower, for this example.
Yeah, exactly. Like there, don't get too caught up in the fact that that's going to go bullish after that little range breaks, basically.
Yeah.
Like still be aware of that, because that, you know, that, I mean, that was what, the whole of Monday and Tuesday, I think, that bullish pullback that week, right? And there were some fucking good trades in there, like really good trades, like 1 to 40s, 1 to 30s, 1 to 20s, you know, like really good trades, right? So it's still able to be capitalized on. It's just waiting. It's just understanding that they're probably not going to run the actual high of the largest supply range, the structural high, whatever you want to call it, right? It's probably going to realign and come crashing back down through the floor.
Yeah.
Yeah.
Okay.
Because
Perfect. Thank you.
bigger consolidation, right? Like there's more volume in that range than there is in the smaller range.
Yeah, essentially, I'll just look at that as one whole push. Really. What's the question? Someone said.
I think Lou asked a question. So to follow ranges, how do you actually get in? Do you refine the ranges to M15 levels? Yeah, mostly, like, or you just wait for M15 structure to align, basically. Like saying here, right? We're obviously going to be aware that this is our like larger range, right? Here's our extreme POI, right? So yeah, this is obviously prime real estate for sales, right? Or if we get like an M15 bearish shift anywhere within here, like a proper break of structure, that may well be the realignment to take out that low as well, basically.
Yeah, but like we we're saying, if you're playing this 4-hour range, and obviously you're playing 15-minute up, you're then waiting for that to realign. Then see, because the one trades I like to get in, 15 minutes coming up like this, order flow changes, and then we come up here, then we get onto the 1 minute, and then again we're waiting on the 1 minute for the same thing to happen. Everything's aligned. 4H, 15-minute, 1 minute, right? You missed the first one, okay, whatever. Yeah, order flow, you're just playing the next one, and you're going again. Essentially, that's just how it works. You're just following the money, really. Essentially, that's what it is. They're the most high probability trades, in my opinion, always. Always. What else is there? Any other questions? What else did you want to talk about, Sam? You saying something earlier to me.
Like just run over how to like build a case study for people. But hold on, there's a couple of other questions.
How do you use order flow range and engagement?
So after 15M boss and OF is pro trained, we report yeah, basically, mate. Yeah, like Lewis just explained, like that alignment thing, basically.
There's a question there. How do you use order flow ranges with inducement? Well, obviously, what happens usually is you get this. This is a pullback. You get when this low goes, okay, this range gets left. Once the low goes, you're more than likely going to get a pullback, and the ranges that's left unmitigated will then get mitigated. This will be your inducement. Then you carry on. So once a low gets taken out, significant low, you're more than likely going to get a pullback. Then, obviously in a pullback, ranges are going to get used for inducement, and then you're going to continue. That's how I'd answer that. More than likely, if you're on the right side of the market, your ranges are going to get respected until a low goes.
And Lewis, with regards to that, would you look to trade the area that induces the high and breaks the structure, as in the revisit to majority?
Yeah.
So if you're going down and you come back up, you take this high, drawing is pretty shit. You take the low. Are you saying that this is then going to be your entry space to carry on down, or?
Yeah.
Okay.
So you're taking that hot.
You're taking.
It all depends on what's happened over here, I think.
Yeah. Okay.
You know, say this is going like this. This comes up like this. Then obviously, like you just drew there.
Yeah.
Once this goes, more than likely, yeah, that's exactly what I'd look to happen. This low gets broken, for example.
Pulls back, takes the, and
Takes
then yeah, okay.
Goes.
Cool.
Yeah, because until their objective is to take a low out, is they're not going to take out their protected highs until a low goes. So until that low goes, then yes, they're going to buy back in, use this as liquidity to then continue their move.
Cool. Makes sense.
Does that make sense? Yeah.
Yeah, nice one.
Cool. Chat. What was I mentioning? It was. How do you refine a 15-minute range to specific ranges where you can trade? Let me read that again. How do you refine a 15-minute range to specific ranges from where you can trade? Like, it's not always best to enter a trade.
No, well, that's where you select POIs, right? Like that's that's where you have your.
Oh yeah, of course. Inside these 15-minute ranges, yeah, I've got 1 minute POIs, obviously, and I'm going to be trading, you know, from them within inside that.
Like a good example would be, you know, say we get like a thingy like this, right? Or a 15M range like this, right? We've got like our 15M POI up here, right? Really clean, really nice 1M refinement. But price comes in on 1M, doesn't hit this, hits something here, or doesn't hit something there, but gives us super, super clean 1M price action, right? That's like, cool, well, now we can take that, right? Because we've seen it commit from a different area that we didn't expect. But we're looking at a higher time frame. We're not trying to trade this on like seconds, right? Seconds is for hit.
Yeah.
Right. Or say you see like a 5M chop, something like that from there, where you create like a really solid supply level, then you can start looking to take shorts, if that makes sense.
Yeah.
All right, cool. All right, I was just gonna do like show people how to build a case study quickly as well. Yeah, like because it's
You share.
so we'll do it on one. What can we do? Where's a good trade? Actually, do you know what's a good trade? I haven't done this one, but this trade up here, right? Because to me, the way I see the market, it's not the most high probability trade, but there's logic behind it because it fucking worked.
Sam, why do you say it's not the most high probability trade?
Just because of the way the order flow and stuff like that was, mate. I'll explain why here.
Cool.
Okay, so like literally just start with all the price action on your screen, right? Go, okay, what have we done on 4H? All right, well, 4H, we can see that we have mitigated, well, we've mitigated this POI specifically, right? And we haven't reached the top, so then we can start going and investigating that. Oh, well, maybe we did reach the top, I'm not sure. But this is all the good things about doing case studies, right? And you just literally mark up with everything on the screen. Like, we don't reach the top of that. Right, okay, what else can we see on here, right? Okay, well, cool, here we can see that we actually hit like the larger supply range as well. So cool. And I've just been like literally marking all this stuff up, right? Going, all right, well, what have we got? Okay, cool, we've got a weak flow here. Okay, this trade is kind of interesting because if we're looking at this as like a whole 4H push, then we're well at the discount, so we don't always expect trades to come from the discount. So this is like, this is a piece of, you know, I'd want to go back over a few different trades like this and see how high probability this trade is. And then it's like, okay, cool, we've got enough there. Okay, we've got a bit of inducement here as well. And literally just marking up everything I can see, right? Even, okay, does this do anything to the left? Right, is this area in a secret? Let's go and see if we can see. We can go there. We can go all the way over to the left over here. And yeah, we can say that we've definitely had some sort of a steep flip there, right? We've got some form of demand there. So cool. Maybe we can, you know, now this is a thing for, okay, maybe if we see the range as a proper SD flip, then that like makes the probability higher. You know, and these are the sorts of bits of data I'd be gathering, right? It's like stuff like this going, okay, so for every trade, what do I need to see? This, right? Cool, now we can go on 15M and we can go, okay, brilliant. Right, well, what have we got on 15M at this point in time? Well, over here, okay, the area is nice. You know, we can, this is how, like, you know, we learn to refine POIs, right? Because we can say here that, yeah, very much we have a run on liquidity up here, right? This structure looks kind of big as well. So now I'd be thinking, all right, well, what happens if I go on 1H here? Okay, well, this makes more sense because this looks like the 1H lower high, right? So maybe if I see this often enough, there's an argument for bringing 1H structure into my trading. Do you see what I mean? Like, these are all the sorts of questions you're asking yourself when you're doing case studies, right? But you just got it all marked up like this, and you're going, okay, cool. So let's see how the actual trade played out. All right, well, what do we get? Well, we know we've got bullish structure here. We can see, you know, just mark up the high lows, whatever. There's the last significant higher low. This is, yeah, to a degree a high low, but I don't know the way it's formed. Okay, cool. This POI, why does it come from this POI? Well, this POI here is a flip. Yeah, don't know whether I would class it as runs liquidity, but yeah, is it in the premium discount? It's something significant. Well, that's, well, we can say either this or this. This is our last real range. So yeah, it's just at the premium. What else do we have? We have some form of bearish order flow here as well. We can see we've had a little change of character up here. And it's literally just going over every single detail like this, right? And logging down everything significant. So, okay, POI wasn't necessarily a liquidity grab, but it is engulfed. It is this, it is this, it is this, right? And ticking them all off, entering all of that data into your Notion, right? And like focusing on one specific thing at a time, right? Like say you want to do a bunch of case studies over which POIs to pick, you just go and find out what makes up a probability POI, how many different things does it need to have. But yeah, then we're getting down to an entry, right? I'm just going, okay, well, cool, let's go and see what happens here on the lower time frames. Does it hit a refinement within the POI? For a start, up there, which it does, yeah. Yeah, it trades into the, this is how you learn about refined POIs as well, right? Because I bet you half the world at this point, or half the SMC world, was looking at this candle, right? Where we know this isn't our 15-minute POI, our 15-minute POI is here to hit, right? So this is our refinement, taps it here, and is there an entry on the second tip? Yeah, yeah, here we go. Right, so what do we see? What sequence of events do we see? Do we see this liquidation? Yeah, you see it run these highs into here. Right, we see mitigation. We see, yeah, you could argue there's a little liquidation here as well. Create this little thingy here. You get some form of flip when this gets taken out, and you've already had a little charge. Yeah, there's something in there. Where's that node that's kind of okay, so we don't necessarily get everything here. Well, we're getting inside bar there, so we kind of have a change of character here. You know, and it's noticing like these little details, and this is how you go, okay, well, cool. That actually, to a degree, makes sense now. We have a tiny little change of character within here. We get some sort of a flip. So being very aggressive, we could have gotten this hit, right? Or going on to the 1M and going, okay, what happens on 1M over here? And just literally marking it all up, right? And go, all right, well, 1M actually looks very clean here, right? If we look over here, we get the mitigation of this. This is the flip of this, right? It's inside bar, so yeah, it's definitely valid. Probably on a lower time frame, there is a bullish candle there, right there. Right, and then cool, we could have put in here, right? And this is then going, okay, have I seen that sequence of events? Well, yes, I've seen a liquidation, right? I've seen a mitigation, I've seen an SD flip followed by a change of character, I've seen a retest of this level, and I've seen the same sequence of events again, right? So my entry is, here I have church flip, right? Here you can look at either of these, I suppose. I don't know how big the stop would be there. I would probably I could get my stop up there, I'd probably take that, maybe there, something like that. But yeah, and it's just marking it all up like this, right? And going, okay, well, this is one case study of a trade, but taking like annotating it all, right? Like this is my supply to market, okay? This writing down like right, and like having all of this stuff annotated, and this is how you build like case studies around entries, because you have it all marked up, right? And you see this shit over and over and over and over again when you start marking it all up, right? You've got this, you've got, you know, you've got some form of flip in here. Now you've got a little change of character there, and you mark it all up and just build, like that's how you build case studies to build your entry models, basically, right? Because the entry model should always be pretty much the same. It's never any different, really. It's always this same thing, right? It's always, yeah, whatever. Run on liquidity into a POI with a flip and a charge, right? But you need to go and find these and look at them rather than trying to forward test them necessarily, right? Go and find these and mark them up like this, so you're aware of what these look like in various different scenarios, because it's not always going to look the same, right? But you've got the exact same sequence of events, right? Nothing's changed within the sequence of events. Like it's the same, right? Like if we go and look at, you know, whatever, wasn't another good trade from POI. Down here there were a couple, right? Yeah, there's good trade over here potentially. You know, we've got the same sequence of events, right? We come into a POI, we mitigate this little POI here, we give a change of character here, we've had some form of an SD flip within here. This is that, there's your entry. Right, and it's just doing that over and over and over and over again. So you until you ingrain that whole thing in your head about this is what I look for every single trade, right? Or you obviously you have a couple of different setups, but yeah. Does that make sense to everyone? Yeah, I like the second. Right? So the inside bars qualify for Chotch. Yes, they do. Yeah, they do, but it's like I was saying here, you still need to see. Where was that? Here, someone was asking about this one, right? This can't really be a Chotch because you still need to see that high go up here, right? We can say this is the low, but you can't really say that Chotch is like one candle here and here, right? It doesn't really make sense as such, right? Like it more needs to be this is a change of character here to here, right? Or here to here. I wouldn't say this high, this low. I would say that's probably like a 5 then Chotch. Yeah, I don't know. They're funny ones. They work sometimes, they don't work sometimes. But change of character is like that anyway, you know. It's the start of a commitment. Yeah, it's never guaranteed, but yeah. Yeah, cool. Does that make sense to everyone on how to do like a case study and shit? Yeah. Do I use Notion? I used to use Notion a lot, mate. Yeah, I used to use it an awful lot. Lewis knows how many fucking case studies and shit I used to do. I don't really anymore, to be honest. But yeah, I probably should, to be honest. And like weeks like the last 2 weeks, I should go back and case study everything because I made mistakes the whole week. You know, like that's when you need to think, okay, maybe I'm doing something different from my process, so I'll go and figure it out. You know, and just go and back test it all, journal it, all of that sort of stuff, right? Write down what you should have done, write down your mistakes, and it's always good lessons, mate, because yeah, we're all a work in progress. But yeah. Yeah, cool. All right, guys. Does anyone have any questions about anything? Does anyone want to go over any L's they've taken or anything like that? You had a question about what time frame do we mostly execute on? I use the 5S pretty much, specifically. Winning a fight, NJAT or Phantom? Well, I mean, Chugs and Burton are generally pretty off their nut, mate. So, you know, I reckon Brad's quite mean as well. He's a bit of Canadian lumberjack. So I don't know. But there's more of them as well. Oh, Kev's a fucking man, mate.
They'd be outnumbered all the coaches they got. Do you know what I mean?
So it's the low being taken first. Low being taken first in short range. Oh.
When they was talking about what?
I don't. Yeah. I mean, yeah. If you've got a bearish trend, it's taking the low. Yeah. If you've got a bullish trend, it's taking the high. If that's what you mean.
Sam,
Yes.
somebody was asking in the questions before about how to use ranges for entries, and I noticed a sell yesterday. We kind of broke out of the range, and then we came back into the 15-minute range. I wasn't looking for a specific POI, but I noticed kind of once we'd entered the range, the 1 minute started to slow down, and then we chopped and flipped, and it was a good sell from that zone. Maybe it just might be a good example to show.
Is it, mate?
Oh, so you mean when you're not refining it, you're just coming into a 15-minute range, waiting for the 1 minute to.
Yeah,
change the
I've
character.
noticed that happening.
Yeah.
Quite
It does
often.
happen. It does happen a lot.
Well,
And I've started to implement that as a good kind of confluence to get into trades.
yeah, like 100%. It's that whole thing, right? Like basically, if we're looking at like even this range here, right? This is like
That's exactly the range, Sam. Yeah.
here. Oh, right. And
That one,
you
yeah.
took a trade off of here somewhere.
Yeah.
Yeah. Good trade, mate. But here, right? It's just being aware that this whole fucking thing, this is a high time frame POI, right? This is going to be, I don't know, what like, yeah, it'll be
To buy to sell, essentially.
90 minutes, maybe something stupid like that. Yeah, look, there you go. There's your POI, right? Like, it's just understanding that this is this, right? So if you see 1M change from there, right, and like a nice 1M shift as well, where it's over here, right? Yeah, if you see like you trade over here somewhere, I assume.
No, Sam, it was the second time we entered the range. It was further over to your right hand side. You can see like a lovely distribution pattern.
Oh, there, yeah.
Further up, yeah, there.
Yeah. I mean, this hits the POI as well, right? This hits the POI out there. But yes, this is a good trade. This is a really good trade. I took a trade from here. Fucking bitch stopped me out by like 2 ticks before it tanked. But yeah, whatever. But yeah, like this really nice trade. Like as soon as it comes into the POI, because again, this is just a higher time frame POI, right? That's all it is. Right, this whole range is we call it a supply range. We can call it whatever we want, right? If we go and look at this specific bit of price action on a bunch of different time frames, it's always going to be there. All it is this is just a stack of orders, right? That was created correctly because we see a run on liquidity, right? And a drop, we create equal highs above it, equal highs above it. So we've got literally everything here again. Right, we've got a high time frame POI, we have a level of inducement, we have a pretty slow retrace to it, we build liquidity before it, right? give a change of character, there's your entry. Like it's super simple.
Yeah, it was a beautiful trade.
Or here, or yeah, whatever. Yeah, it's really nice trade. Really, really good trade. I think it comes back up into this after, and there's another trade from here as well. Right, like I actually ended up when I saw this happen, I'm thinking it ended up partially in the 2 longs I've got, and I did think the high was going to go, but yeah, the high had other ideas, as most of the highs have had recently. But yeah, it comes back up, fucks around a bit. Yeah, messes around a bunch. Distributes again, pings in.
Actually marked out that long and didn't end up taking it. I was gutted.
It's just nice trade, man. Really nice trade. Yeah, pings back in, comes back up, and then yeah, goes to hell again. And it comes back into the essentially the flip over here that flips this level here, and just dies again. You know? Like, and it's the same thing over and over and over and over. Like literally, right? It is the fucking same thing over and 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 over. It's all it ever does. I really need to stop doing things other than this, because this is all it ever does. Right? If we all just stop doing anything else, right, apart from taking these trades, I guarantee you'd have like a 90% win rate. Yeah, you basically, yeah, you'd never lose. Everything would be like at least 1 to 20, basically. But yeah, I like doing dumb shit for some reason. These, like this trade here, right? 15M order flow is bearish here. We get an entry like this from a higher time frame POI. I guess that's 15M, something like that. Yeah, maybe 10. Yeah. 5. Okay. Like if you just take trades like that, you won't lose, basically. Yeah. The light has been out, mate. Yeah. Yeah. All right, guys. Cool. Any other questions? Any more? Oh, there were some nice shorts this week, weren't there? This is gonna be. Yeah, cool. Yeah, I'm annoyed now. Now I've been looking at all of these shorts. It's like, yeah. Yeah, no worries, mate. We wanted to keep them short too, not too much waffle, not too much shit. You know what I mean? It's better. But yeah, cool. All right, guys, peace and love. I will speak to you all in the morning. Take it easy.
See you later, lads.
Bye.